Walmart had been on an absolute tear. The company had been improving business operations and even beating Amazon at its own game in e commerce and logistics. But now, as a result of the tariffs implemented by President Donald Trump, Walmart's stock price has been heading lower. It was down 4.62% today on the back of the broader stock market decline. And of course, Walmart imports a lot of things from outside of the United States. Many of the products you see inside Walmart stores were not manufactured in the United States. They were manufactured elsewhere, most notably in China, which was hit with tariffs that could be higher than 50%. So that has investors questioning, should they sell Walmart stock? Should they buy Walmart stock? What's going on here? So I'll add some information, some insights into what I think is the impacts to Walmart's business, some early insights. Of course, we've got to wait to get more definitive information as the company operates in the new environment and informs investors the change in operations. But I'll do my best to provide my early insights in how Walmart will be impacted and if investors should buy the stock right now before we even get any more information.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I updated my discounted cash flow valuation for Walmart, and it had a few moving factors over the last, I want to say 2 weeks since I recently updated the cash flow valuation. The first thing that changed was the risk-free rate, the broader stock market decline. One of the things that's also been happening that's been less reported on is that government bond yields have been falling. That's thought of as the risk-free rate, and that's fallen from around 4.3% down to less than 4% just in the last few days. So that's a component in my valuation model. And the reason why that's a component in not just mine, but probably many investor valuation models is because as an investor, you have a choice to invest in stocks or bonds. And if you're going to invest in bonds, one of the most popular bond is the government 10-year bond, which comes with essentially as close as you can get to zero risk. It's not entirely zero risk, but it's about as close as you can get. And if that risk-free rate is higher, then investors will make the choice, like, why would I invest in stocks if I can get 8, 9, 10% in a government bond, right? So that's a choice. And the change in that interest rate is a factor in the valuation model. I also incorporated into the discount rate because cash flows in the future are not worth as much as today. So after these adjustments to the risk-free rate, adjustments to the company's beta and the expected future free cash flows, my intrinsic value per share is $101.73 for Walmart stock. Current market price is $83. So according to my DCF, Walmart stock is undervalued. Now, according to the forward price to earnings ratio, Walmart stock is trading now at a forward PE of 28. So a couple of weeks ago, when I last visited Walmart stock, at the forward PE valuations were over 30, and I told investors that was too expensive. I thought that was too much of a premium to pay for Walmart business, even though Walmart has done a great job in the last, I want to say, 5 years, dealing with unprecedented circumstances, while at the same time making inroads against Amazon in the e commerce business. Walmart's recent investments in that category have been turning out phenomenal. The buy online, pick up in store is working really well. The logistics networks, the delivery networks are working really well to lower the cost each delivery. Walmart is capitalizing on the increased visitation on its website to sell advertising. That's a high margin business to offset some of the, lower profits they get when people shop online because you have to incur the delivery expense, and also people make fewer impulse purchases when they're shopping online versus shopping in person. So the ad revenue has somewhat offset those declines in those incremental high margin activities when people come in store. Still, Walmart was already trading at a more expensive valuation than Amazon. And so I thought that was too much. And I thought that the premium had been overdone. And I told and cautioned investors that Walmart was not a buy at these higher valuations. And so now we're getting Walmart stock at a lower valuation. Instead of a forward PE closer to 40, we're getting a forward PE closer to 30 with a discounted cash flow valuation that suggests it's undervalued. Okay. That's that side of the equation. Now let's talk about the impacts to its business. Walmart has an extensive supplier network. That's been one of Walmart's competitive advantage is its relationships with suppliers. Working with suppliers, helping suppliers sell Walmart low-cost goods that then Walmart can sell to its customers at low prices. That relationship, that network with its suppliers was one of or is one of Walmart's primary competitive advantages. One of the things about its supplier network is that it's primarily outside of the United States. A lot of it is in China. And so now that supplier network is going to be hit with a higher cost to import those goods. Walmart could work with its suppliers to help it offset some of these costs, but I don't think it's going to be able to offset all of that. Walmart's going to need to raise prices in store. But the good news for Walmart stock investors is that the increases that Walmart will have to make will probably be less than what competitors have to make. And so when you're looking at it from a shopper perspective, shoppers going to stores, going to Walmart, going to Target, going to Costco, going to Amazon, Walmart, relatively speaking, is likely going to continue to be able to offer very competitive prices that are lower than its rivals. And so, relatively speaking, Walmart's prices are likely to remain the low cost leader. And so, from a shopper perspective, it's going to attract shoppers, maybe even more so as we enter into more difficult, more challenging economic times resulting from the tariffs. So, Walmart might attract the incremental shopper. But that incremental shopper is going to buy fewer things at Walmart because people don't have extra money. Back 2 years ago, 3 years ago, when we faced inflation due to supply chain shortages, people had the stimulus money that governments sent out. So when they saw higher prices in the stores, they were just like, okay, we don't like it, but we'll spend the money anyways. Now people don't have that extra money. So when they see higher prices at the stores, they have the same amount of money, but everything is going to be a higher price. They're going to have to make trade-offs and they're going to say, instead of buying the Sunny Delight, we'll just buy the sparkling water or whatever their trade-offs might be. So they'll buy fewer things, they'll pay a higher price for each thing. And at the end, the overall average customer spend when they come into the store is likely to remain either the same or lower, depending on how much lower activity results from the tariffs. So Walmart for certain will face higher costs for the products it pays its suppliers for. Walmart will then need to raise prices on its customers and it'll have to wait and see how customers respond. And if you remember from your basic economics lesson, when price goes up, demand goes down. So I'm expecting similar results when you look at results from Walmart over the next 3 to 6 months when they start giving investors an update as to how consumers are responding to higher prices. We'll know more, but that's my early speculation, my early reasoning on how Walmart's business will respond. I don't think this is a buying opportunity. And so I've had Walmart stock rated as a hold. I still think it's a hold. I think if you own it, it's not a reason to go panicking and selling. I also think if you're interested in buying it, this is not the time to buy it. Too many uncertainties, and Walmart stock is now uncharacteristically a higher risk, right? It's usually not a high risk investment, but due to these unprecedented times, it's now become much riskier than it was before. So this is a situation I would say put it on your watch list if you're really interested. If it approaches much lower valuations, then you might consider we can revisit that again. But right now, at a forward PE closer to 30, I think it's too much to pay for a business in this environment, for Walmart's business in this environment. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.